Good evening, everyone, and welcome to Admiral Markets webinar of 7th of January 2015. My name is Nenad, and I wish Merry Christmas to all Orthodox who are celebrating today. So today we are going to talk about very interesting strategy. It's called squeezing the railway. It's based on a couple of indicators and well-known pattern. So pay attention because this strategy is very good for taking counter-trend trades. And I need to tell you that railway strategy, it's pretty much a combination of price action and indicator strategy, and for its purpose it works good because it's a counter-trend strategy. I have some questions. Goran is celebrating the Christmas and he's saying Merry Christmas, and he's thanking us for useful advices from Monday. Yeah, Goran is basically saying that he had very good trades on Monday. Yeah, pretty much Monday was very good for our session recap. I don't know if you, I presume that you all visited our session recap, and we actually had great trades on GBP scalps, Euro dollar scalps, Australian dollar, New Zealand dollar even. Everything went fine. So yeah, good week for us. Good start of a new year, 2015. And Goran, I'm very glad that you have made money, and hopefully it will also, we will continue with making pips and money. Although it's a little bit tricky now to take any, any counter trend trades. I need to be honest, I have a euro dollar buy at 18.00, so maybe it will hit my stop loss. It's 70. I want at least 100 pips from that, but I don't know. It's a really low risk trade, and I know everyone is short on dollar, and today's analysis showed potentially 18.00. I think that you saw the analysis. I have now, I'm long on euro dollar. Maybe I'm the only one who is long on this world. It doesn't go really. It's very hard to trade euro dollar to the long side at the moment, but we will see. It doesn't matter. It's a low risk trade. I am aiming at least for 100 pips, so we will see. So I don't know. I would like to see a gap close. Yeah, even with Fed I enter, Claudio. Yeah, even with Fed. I don't usually do that, but my stop loss is, it's 30 pips and my risk is 0.2. It's nothing. The risk is very small. So we will see. I want at least 100 pips, but I would like to see gap closed. So I don't know. Maybe the stop loss will be hit, but maybe it won't. At least I have a reason to trade euro dollar because I cannot short it on these levels. It's not my style to short it when it's so low. Kalian is saying I'm with you cheap, but small difference, I'm Eurocat. Yeah, let's try to take some counter trend trades. I don't know. Yeah, and Claudio, you are right. He says, I followed your rules, not trade before major events. Yes, guys, if you don't know what to do, if you're not sure, don't trade it. Even if I lose euro dollar long, I will recover from it. It's low risk, but I would really like to see now gap closed, and 18.00 is very low. So I don't know. Let's see. But today is we will talk about it on Monday, definitely. And again, I will explain you on Monday. I will tell you what I think about euro dollar and why I think that everything has been priced in this drop. So we will talk about it on Monday. But today let's concentrate on this strategy. This strategy is good. I have tested it, and I like how it behaves on counter trend trades. I will explain you now. Yeah, okay. now Ilya is saying euro dollar is so low because of Greek elections. Yeah, all Greek elections are also counted in this drop. Definitely, not just because of Greece. It's because of low CPI. It's because of dollar strength. It's also because of quantitative easing possibility, which could be announced on 22nd, but I don't think there is a slight chance that it won't be announced on 22nd, and we will talk about it on Monday. So, Bollinger Bands squeezing the railway strategy. So, squeezing the railway, remember this, it's very, very good. Risk disclosure statement stating all possible risks associated with forex market. By accepting the risk disclaimer, you're also proceeding further with me. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author. It's me, and in a way it represents the actual suggestion for the trade. These are not WK's opinions, and the website in the video is not a .co.uk website or the globalnews.com website. Forex is a risky business, and this should not be taken as advice. This is a personal opinion only, and this webinar is for informational and educational purposes only. Okay, we need to thank, of course, Admiral Markets for letting you trade with me, and of course thanks to Admiral Markets we are able to enjoy these webinars, premium webinars, and weekly forex recaps. So today's agenda is definitely, I will cut to the chase. I won't bother you with I don't know, some formulas and things which are not interesting. So this strategy consists of Bollinger Bands, Rayleigh Pattern, and MACD indicator. You know, guys, that I have been trading MACD indicator for quite a long time, and I need to say that MACD is definitely my favorite indicator. And I need to tell you that there are a lot of strategies which use MACD. And this strategy is one of those strategies which uses MACD. Without MACD, this strategy cannot be good, and I will show you why. And definitely, the strategy is a good primer, or how you can call it, example of a nice and simple way to trade the counter trend. It doesn't matter which pair you trade. The advantage of the strategy is simple. The strategy is very simple, and it only has two indicators, Bollinger and MACD. And basic thing, it's effective on every pair. So it doesn't matter whether you trade euro dollar or euro New Zealand. It doesn't matter, because it's also comprised of a Rayleigh pattern, which is also known as tweezers. So Rayleigh pattern or tweezers pattern is the pattern which basically is giving us signal for entry. Now, what is Bollinger Bands indicator? I will tell you a few simple things. As I told you, I won't be bothering you with the different formulas for calculation of Bollinger Bands. It's not so important for you, right? So, volatility indicator is, that means that Bollinger Bands is basically a volatility indicator in itself. When you see Bollinger Bands behaving like this, you know that there is no volatility in the market. When you see that Bollinger Bands are squeezed, this is called a squeeze, okay? That means that usually after the divergence of Bollinger Bands indicator, the trend will start to change. And you know that in a matter of time, the trend will start, okay? And Bollinger Bands might go like this, diverge. So this is convergence of Bollinger Bands when they are so tight, and when they start to diverge from each other, that means that the trend is starting and volatility is going up. So primary use of Bollinger Bands is that it gives us cues for volatility and for new trend forming. The other very important aspect of Bollinger Band is Bollinger is dynamic support and resistance level indicator. So it means that once Bollinger Bands are diverged, expanded, once the price hits it, that means that this is important resistance touched, and price can ride the band, or it can basically go inside it. Okay? Because of that purpose, Bollinger Band is used both in trend and counter trend environment. Okay? So we use Bollinger Band for either counter trend or trend environment because of this special purpose. So we have a squeeze, then we have divergence or expansion of Bollinger Bands, and once Bollinger Bands are expanded, the price may go up, riding the bands, or it can reverse into the bands to the downside. It's developed by J.Bollinger, okay? Now, Bollinger Bands, we have, by default, 20 period simple moving average. This is the middle line, okay? The middle line is 20 period simple moving average. Upper band is usually 2 standard deviations above the moving average, so it's +2, and lower band is -2 standard deviations above the moving average, so +2, -2 deviation. Okay? Majority of prices should be in between bands. That is also one of the concerns about Bollinger Bands, and the thing is, the majority of prices should be in between bands. Okay? In between bands. So that means, as you can see on this picture, that means that the majority of price movement should be contained within the price. And one more thing to notice is that the slope of Bollinger Bands determines the trend. So you can see that from this point the slope was to the upside, so the trend is to the upside. Now we have slope to the downside, the trend is to the downside. When this middle line is basically going sideways and both of those lines are going in a horizontal position, that means that the trend is sideways and there should be a volatility change. And you can see the trend started to go to the upside. So this is also useful information for you to know if you use Bollinger Bands, I don't know, on your charts. The slope of Bollinger Bands and the middle line determines the primary trend on that particular time frame. Okay, so that is in short about Bollinger Bands. Now, what is Rayleigh Pattern, so-called tweezers? Okay, Rayleigh Pattern is basically 2 candlesticks with almost the same length. Many of you probably have witnessed many times that Rayleigh Pattern tweezers are basically when they show up, they are going always in counter trend direction. Okay, and usually those candlesticks are almost the same length. But I can say that 3/4 of length is also acceptable. Okay, they look like parallel Rayleigh tracks, and I can say the small variations are allowed. I will show you on next chart how it looks. Now, if the first candlestick is bearish, then the second candlestick must be bullish or vice versa. Okay, so if the first candlestick is bearish, the second candlestick must be bullish or vice versa. A bullish railroad track pattern has a bearish candlestick in front and a bullish candlestick after it. A bearish railroad track pattern has a bullish candlestick in front and a bearish candlestick after it. So guys, remember this. This is important, okay? Now, psychology behind Rayleigh pattern is traders usually realize they're in the wrong side of the market. Let's see first Rayleigh pattern how it looks. So you can see the trend was to the upside. We have bullish candle. Then we have bearish candle, okay? Look at this. This is perfect bearish railroad or Rayleigh pattern. Okay, it's perfect. So the second body is the same size as the first candle. There can be some variations, guys. As I say, 3/4 of the length. It's okay. 3/4 of the length. Sorry. So 3/4 of the length. It's okay. Okay. And bearish, you know why it's not engulfing. I will explain you why it's not engulfing now. And this is basically bullish railroad. The trend is to the downside. We have bearish and then we have bullish. Okay, let's say it like this. Why it's not engulfing? It's not engulfing. Ilya, these two bodies are the same length, okay? Bullish engulfing pattern is we have bearish candle and then we have candle like this. Okay, it's not precise, but you know what I mean. So this is engulfing. Engulfing pattern is when one candle to the left side is smaller to the candle to the right side. Okay, so this is, let's say, bullish engulfing. Okay. You have a drop, then we have a bearish candle, and next candle is eating the previous candle. So this is bullish. Yeah, this candle is basically, but look at this, it also can be deemed as railway because it's almost the same, like 3/4 of the length is also acceptable. Now the ideal railway pattern is we have basically two same candles side by side, okay? Or as in this example, bearish and bullish. You can also deem this one, so this is, let's say, bearish and 3/4 of the length, this, like this. It can be deemed as railroad tweezers. So it's different than engulfing. So we are not trading the engulfing. We are trading railroad tracks. Okay, this is railroad tracks. In this example, this is tweezers or railroad. 1, 2, 3. So 3/4 of the length is acceptable because the market is not perfect. You won't be seeing many times two totally aligned candles. You won't be seeing this many times. Because of that, we need to call this tweezers, railway, and we need to allow 3/4 of the length. Okay? In these examples, you can see railway pattern. Okay? So this is railway, this is railway, this is railway. These two candles. Okay? Now, let's see, this is, let's say that, for example, this candle here is like this. So this would be engulfing pattern, okay? This would be engulfing pattern. If this candle is lower than this, and the body of this candle completely covers the body of the previous candle. So railway is different from engulfing pattern. So this is railway, okay? This, and this. Okay? Rahul is saying, Sir, just joined. Can you please show the slides again? Yeah, I can tell the slides. So for all of you who are a little bit late to this webinar, we are using Bollinger Bands for this strategy. Okay, Rayleigh Pattern and MACD. Okay, Bollinger Bands, I explained a little bit about Bollinger Bands, you already know about it. Now I'm explaining Rayleigh Patterns, also known as tweezers. So two candlesticks with the almost same length, 3/4 of the length is acceptable. They look like parallel railway tracks. Okay, so this is perfect bearish railroad, and this is perfect bullish railroad or railway. It's the same. So when you see bearish railway, you need to have uptrend, bullish candle, then bearish candle, which is the same size as the first candle, or 3/4 of the size. Railway bullish is you have downtrend, you have bearish candle, and second real body is basically as the same length as the previous body. Okay, as in this example, or as in these examples. Okay. Now, the psychology behind Rayleigh Pattern is traders realizing they're in the wrong side of the market. So traders usually will realize that they're on the wrong side of the market, and they quickly reverse their positions. Also, it can mean position close. When we have a close of some of long positions or short positions, there the market should reflect that as Rayleigh pattern. Also, it can show itself after stop grabbing. And they usually close at the same level as the previous candle instead of engulfing it. Okay? Let me pause the screen just for a moment. Okay. Just a brief pause, then I will continue. Okay. I have this. Okay, just a second. Now we can continue with webinar. Okay, after stop grabbing, let me explain you. So, traders realizing they're in the wrong side of the market. What does it mean, basically? It means this. Let's say that you are to the short side. Okay, you're going short. This is bearish candle. And suddenly, you see that you basically took your trade very close to the support level. And what you can do basically is you can say, wow, this is very, very close to important support level. I need immediately to close and go long. What you can do is you can close your trade and go long. If the majority of traders do that, you would see bullish candle. This is Rayleigh. Or it can look like this. Look, these are all reflections. These are good examples of tweezers or Rayleigh pattern. Look. Okay. They usually close at the same level as the previous candle instead of engulfing it. Okay. Is the current euro-dollar chart showing Rayleigh pattern? Let me see. Let me see. Yeah, it might show. This is the example I used for this. Let me see. This is euro-dollar chart. And no, this is not Rayleigh. This is not Rayleigh. Guys, Rayleigh. Let me find you a Rayleigh here. This can be thought of Rayleigh, but it's not perfect. This is not a signal, but this is Rayleigh pattern. But this is not a signal for this system, but this is Rayleigh. Look at this. So this here is Rayleigh pattern. So for euro-dollar to show Rayleigh, it should look like this. Okay, look at this. I will zoom it in. This is Rayleigh. Okay, these two are Rayleigh pattern. This is it. Okay. So, yeah, dollar yen. Sorry, I didn't see it's dollar yen. Yeah, I will move to euro dollar. Okay. Dollar yen. Yeah, this might look as Rayleigh. Indeed, this might look as Rayleigh, and yeah, this is it. This is Rayleigh pattern. Here. Okay, this is Rayleigh. You're right, Adrian. Okay, now let's wait. So now you know what the Rayleigh is. So 3/4 of the length is also acceptable. Okay. Then these are examples. We also can use this example. This is Rayleigh on euro dollar support, Bollinger Band touch, and sorry for the wrong slide. And now we have MACD. And these three, basically two indicators, Bollinger Bands and MACD, are used with Rayleigh for trading counter-trend trades. Okay? MACD is a trend following momentum indicator. So MACD is following the momentum of the market. MACD is calculated by subtracting 26-day exponential moving average from 12-day. So basically this is it. This is calculation of MACD. As I told you, I won't bother you with these details, but it's enough for you to know that MACD is a trend following momentum indicator. MACD is used for momentum, direction, and divergence. So momentum, direction, divergence. And today, we don't use standard MACD, which is integrated on MT4 platform. As you know, my personal favorite is real MACD, or so-called MACD two-line indicator. We use MACD two-line indicator, not MACD which is integrated by default on MT platform. It's old MACD indicator, and it's, in my opinion, it's not good as it is MACD two-line. So MACD two-line is definitely my indicator of choice. Okay? And the MACD two-line indicator we will use for this strategy. Guys, if you don't have MACD two-line indicator, as always, you know that I will help you. Just send me your email, tarantulafx@gmail.com. This is my email, and if you don't have MACD two-line indicator, I will be glad to send you. Okay? So for all of you who don't have the indicator, or you're not able to find the indicator, I will send you. Just send me an email. So these are the indicators which we will use in this strategy. Now the rules for the strategy are pretty much simple. As I say, this is simple yet effective system. Okay? So first of all, guys, you need to wait for the price to hit Bollinger Bands. Okay? After the hit of Bollinger Bands, you should watch for Rayleigh track. The third step is MACD should cross in the direction of your trade. These are three steps, simple, which you use to trade this system. Trade only 1 hour time frame. Initial stop loss is 30 pips. Target is 30 to 60 pips. And the important thing is, no new low or new high should be formed after Rayleigh pattern forms. I will explain also in examples, so don't worry. But guys, please now memorize this slide, print it to your screen, because these are the rules you should follow when you're trading this system. I will go with examples, so please print screen this, take a screenshot. I will give you minute to take a screenshot. These are the rules, so please memorize it if you want to trade this system, okay? So the first step is to wait for the price to hit Bollinger Bands. The second step is watch for railway track. The third is MACD should cross in the direction of your trade. Trade only 1 hour time frame. Initial stop is 30 pips. Target is 30 to 60 pips. And no new low or new high should be formed after Rayleigh Pattern forms. That would mean we won't see, this is a Rayleigh Pattern, okay? We don't want new low here before MACD confirms an entry. So the entry on euro dollar, if you want to trade, this system should be when MACD crosses, when blue line crosses red line on MACD, you go long. But no new low should be formed in between. Okay? As you already know, I'm long from 1800, but on this system, you can also try to see how it will behave. And you can test the system by scrolling your charts to the left, and you can see that this system is effective, really. So it's suitable for new and experienced traders. Try it, really. Now, the examples. This is the example, scholastic example of basically how the system behaves. First is wait for the price to hit Bollinger Bands. This is, look at this, this is where the trend has changed. The price has hit Bollinger Bands at this place, and now we wait for railway track. This is railway track here. The third is MACD should cross in the direction of your trade. And this is the entry. This is the cross. Look at this green histogram. The green histogram is, look, this is the switch. You can easily distinguish the switch. All histograms before were red, and when blue line crossed red line, this histogram turned green. So this is when blue and red line are crossed. So you need to wait for the candle close. At this time you go long. Look. Look at the simple system. 1 hour time frame, guys. 1 hour time frame. That is why I told you to take a screenshot. Only 1 hour time frame. Only single time frame. 1 hour time frame. Okay? Let's see another example to the short side. We can see that in this time Bollinger was hit, and look at this, railway, and then bang, cross, and a drop. Okay, now this is not a good entry, although it gave some pips, but it is not good entry. Why? Because MACD was already crossed, so you need to wait for the cross before an entry. The price should hit Bollinger Bands. You need to have railway track, and here you need to have MACD non-crossed, so you need to wait for the cross. This is where, look at this, MACD was already crossed at this point, so you don't take the trade here. You don't take the trade. Bollinger Bands is on default settings, Kalian, yes, default settings on Bollinger Bands. Okay? So look at this, you have a cross here. This could be a valid entry only if this blue line stayed below red line and crossed. But because it didn't cross, it was already crossed before it happened, this is not a valid entry. Okay? Stop loss is 30 pips. Guys, Adrian, always initial stop loss is 30 pips. So once you're in the trade, your initial stop loss should be set to 30 pips. Okay, it's always the same, 30 pips. That is why I'm saying, guys, please memorize this slide. Okay? Print screen, do a screenshot of this slide. Okay? It says clearly here, trade only 1 hour time frame. Initial stop loss is 30 pips. Target price is 30 to 60 pips. Okay? And you should always know that no new low or new high should be formed after Rayleigh pattern forms. So this is the form of Rayleigh pattern. If this candle had a low, let's say like this, that means that new low has formed and you don't take any trades. Okay? This is, now just confirm that you understand this. So this is new low after the Rayleigh has been confirmed. So the first step is wait for the price to hit Bollinger Bands. Watch for Rayleigh track. This is it. Then no new low should be formed. I have put this just to tell you, if this was the low, we wouldn't take the trade. Okay, so no new low after the Rayleigh track. Okay, and you need to wait for MACD cross. This was when the price crossed. Do you understand this? This is important. No new low or new high. Okay. Just confirm, guys, if you understand this. Tell me yes. So, good. Because this is important, very important for you to know. Very important. Okay? Great. Also, look at this. This is not a good entry because, and we wouldn't make any entry because MACD here, in this example, was already crossed, look, before the price made Rayleigh. So we don't take any trades here. It should be like this. It should look like this, non-crossed. Then after the Rayleigh, it should cross. So, again to clarify, another example. This is good short position here. So first we have Bollinger Band touch here. It corresponds to Rayleigh. This is great Rayleigh pattern. Look, the example. This is Rayleigh pattern. Then after the Rayleigh pattern, before the MACD cross, we shouldn't have any high here. And we don't have any high, right? And look at this. How the price dropped. Okay, great example. I think you would like this system. This is very simple and effective. And look at this. Rayleigh pattern here. But look at MACD already crossed up, so we don't take any trades. Okay, we don't take any trades because MACD was already crossed at this point. Okay, and this is all you need to know about this strategy. Very effective, guys, simple. Now, Kalyan is asking, do you use this system? Kalyan, I only trade Camarilla MACD, but once in a while I can add to my positions. So now what happens is I am already long on euro dollar, 31 pips currently in the profit. Now if this MACD confirms an entry, I might be taking an add-on to see. So sometimes I might use this. And Kalyan, your question is, do I use the system? I tested the system. I flipped the charts to the left side and I was looking how the price behaved. I did manual back testing of the system. But yes, I might do add-on entry. Maybe not particularly for euro dollar because I'm already long and we have FOMC. But in normal trading conditions, once I already made divergence trade, because my MACD, Camarilla MACD uses divergence for counter trend setups, and one of rules is to have divergence. I might do an add-on trade, so try this system. Trade it first on demo account and see how it behaves. As always, if you are new, then trade it on demo. Justinas is asking, what are the results? How many % of trades? I didn't do computer backtesting, so I didn't backtest it through backtester here.
I was flipping the chart to the left, and I was looking how the price behaved. And I can say that it was good from the things which I saw, really. So try to trade it. You cannot say there is 30, 40, 50, 70% of success, because you need to take you need to have a feel of this. You need to take at least 100 trades to see how it behaves. Now the thing is, it's a good counter trend strategy. It's a good counter trend strategy. Follow the rules and practice with trailing stop. The system says 30 pip stop loss, 60 pip or 30 pip target, because we are living in a world now where volatility is high. Try to practice also with trailing stop. After 15, 20 pips of profit, move your stops to break even or plus 10, 12. Practice with trailing stop. But the primary rule for this strategy is initial stop loss 30 pips, target 30 to 60. But watch the price. Watch how price behaves. Okay? Okay, guys? Now, if you have any questions about the system, you can ask me. And again, I will say that for anyone who basically who don't have MACD two-line indicator, you just send me an email, and I will reply you with the indicator attached. Okay. So once more, these are the rules. These are the examples. So wait for the price to hit Bollinger Band. Watch for railway track. No new low after the railway and before the MACD cross. And finally, MACD should cross in the direction of your trade. Hit the Bollinger Band. Wait for railway. No new low, no new high on this example. No new high in between railway and MACD cross. No new high, and here is the entry. Okay. Goran is asking, are higher time frames better for this strategy? He's trading 4 hours. I only tested on 1 hour. So if you want to trade it on 4 hour, you need to test it yourself. I never traded on 4. I never saw how it behaves on 4 hour. Because, MACD default settings are 12, 26, 9. I use these settings on intraday time frames, and my usual time frame of choice is 1 hour time frame, because I'm mostly intraday trader. So I left the MACD really on 12, 26, 9. Okay. Can you show a few more railway track candle pattern on live chart? Want to see a few more for confirmation of understanding this pattern? Yeah, sure. Sure, Adrian is asking. So this is a railway. This is railway. Okay, pay attention. This is railway. This is railway. If this candle was a little bit to the low side here, it would be railway. This is railway, but not so good, because this should not be so below this pattern. So it can be deemed as railway. Okay? But ideally, this candle should be a little bit higher. Okay? But it can be counted as railway. If this candle was a little bit longer, it would be railway. Do you see the charts? Adrian, just confirm that you see it clearly now. Okay, just perfect examples of railway. This is the railway. This is the railway. Okay. This is the railway. here. And railway here. Perfect railway. I have marked railway on my chart. Okay. Yeah, this can be done on any pair, definitely. Look at this, guys. How good this is. Railway pattern here, but new high here, so we don't trade it. Look, railway, no cross, new high, so we don't trade it. Okay, here, railway, this is valid entry, yes, this one. First step is touch of Bollinger Bands. Second step is railway pattern. Okay, this is the touch, this is railway pattern. Here. And the entry was this was the entry here. Okay. So this is good entry. Railway, first it was the hit of Bollinger Bands, railway pattern and entry here. 25.6 pips. Okay, another entry here. Touch, railway. Not a perfect, but you need to have a little bit of discretion here, but this is it. And drop. Touch, railway, and bang, entry. Hitting the Bollinger Band is this, when the price hits the Bollinger, this is the hit of Bollinger. Yeah, outer band only. So either upper band or lower band. So that is hitting the Bollinger. These two bands should be touched first. One more example, let's see. Okay, this is the first step. Bollinger Band has been hit. This is second step. We have railway pattern here. No new low after the railway, right? And entry. Okay, guys, I think this is it. You know, it's not hard, easy, simple. So guys, if you want MACD2 line, just tell me, I will send you. I hope that you enjoyed the webinar. I hope that you will make money with the system. And for any questions, of course, you can ask me. I wish you guys, if you don't have any further questions, I wish you to trade very safe. And yeah, thanks for Christmas. Yeah, well, definitely, I basically celebrate two Christmas. I celebrate on 24th and I celebrate today. So two Christmas for me is basically the same Christmas but just different calendar. And the thing is, if anything is not clear, definitely you should ask me, feel free to ask me on email. I will gladly respond. Try to use this strategy. That's my advice. Try to use it on demo, and once you made your 100 trades and you are successful, you can go live. Thank you for listening to me. I will talk to you guys very, very soon. Cheers and trade safe.